Hey there, welcome back to our channel, Finance Experts. The stock market can be challenging for beginners, but for individuals who want to trade stocks, comprehending and putting these ideas into practice are essential to navigating this asset class. So let's start our discussion on a very popular topic nowadays, which is navigation to the stock market and guide for beginners to the stock market. A well-balanced stock investment has an opportunity to be an investment that leads to a reliable passive income stream, despite the fact that investing in equities involves an element of risk to capital. Equities can be an effective approach to building wealth. Keep watching and listening to our beginner's guide to stock trading, and we're going to assist you to translate the technical terms into useful information. Stocks are essentially the company's participation credentials. They are given out by companies to generate money for expansion, so the selling cost of them varies according to how well the firm is performing. They could solely be accessible to individuals who invest, as well as might be publicly listed on the market for stocks. Coca-Cola, Xerox, Starbucks, and Apple are among the stock markets that are often traded. How are shares transacted in the stock market? There is a vital difference between investments and trading when it comes to stock analysis. Trading. Shorter-term speculation on securities may result in gains or losses for a trader. Traders frequently use daily trading as well as scalping strategies, generally employing short-term timelines to concentrate on technical patterns. With the use of online trading tools, traders may track the success of the stock as well as their admission and departure prices. Making investments. A stock trader might possibly profit by acquiring the asset frequently through an account at a brokerage, keeping it for a longer period of duration. You may aim to get dividends and interest rates throughout this time, as well as profit from long-term value rises. Emphasis on a total return involves taking factors such as interest, dividends, along with gains on investments when determining the overall profit from a certain company. A direction for investing in the stock market. The simplest approach for getting started in trading as well as buying or selling stocks involves using an online brokerage account that can be opened with just one piece of identification and an assortment of financing sources. Among actively trading merchants, obtaining an entrepreneur commission broker is crucial since they will inevitably pay a higher charge than less active traders. Now let us consider a list of things before beginning stock trading. Set trading objectives. Pick a trustworthy broker. Study major firms. Maintain a diverse portfolio. Exercise risk-taking. Now let us discuss some of these considerations. What are the objectives? How long will the money likely be held in reserve? What are the financial arrangements? Is there a possibility that the money won't be needed until investment has an opportunity to grow? As an example, putting money into stocks could be a wise decision for someone who is saving for retirement because it is a long-term strategy. But if that individual wants to save up money for a down payment on a house next year, they might instead choose to trade stocks over the coming months or think about another asset. What sum of money will be at risk? Participants in the market should think about the amount of money accessible for trading or investing. Whenever it concerns risk, the better prepared one is for the inescapable market swings. The more familiar one becomes with the sectors and businesses that make up those industries. The collection of investments diversified. A diversified portfolio may entail purchasing or selling equities in a number of businesses across several industries. Additionally, it's critical that you diversify your investment choices by making investments in a variety of businesses and sectors, as opposed to placing any of your funds in a single investment method. Bonds, foreign exchange, and stocks are additional assets that might be taken into account when diversifying one's investments. It can be difficult to navigate the stock market, particularly among newcomers. So recognizing how the stock market operates clearly, investing stocks, establishing a clearly defined investing plan, as well as remaining aware of general market circumstances are all essential when making wise investment selections. By spreading the risk around, you may have a better chance of seeing a return on the money you have invested. It's also crucial to monitor its financial statements, administration, competitors, trends in the marketplace, and price-to-earnings ratio. It's crucial to keep in mind that buying and selling the stock market in general has some risk. But with the appropriate information and strategy, you are able to choose properly with the potential to increase your financial status over time. Stocks of companies with publicly traded shares can be bought or traded on the stock market as well. When you buy stocks, you are able to become a shareholder while acquiring a modest ownership position in the firm. Your ownership value will change depending on how well the business is doing, the success of the company, as well as the state of the marketplace as a whole. Common stocks and preferred stocks have been the two primary categories of stocks. Whereas preferred stocks normally have no right to vote but frequently have larger dividend rates, common stocks generally offer shareholders voting power with the ability to collect dividends. Also, there are many types of stocks to be invested in. Growth stocks, dividend stocks, which are called yield stocks, and defensive stocks are the three primary categories of stocks, and each has distinct qualities to comprehend. Shares purchased only for the purpose of capital expansion are known as growth stocks. Organizations choose to reinvest earnings rather than distribute dividends, so investors can solely profit from gains from capital investments. Dividend stocks, also known as yield stocks, regularly pay investors of the firm dividends. In other words, a corporation pays 8 cents annually dividend per share. Companies in sectors like healthcare and power are examples of defensive stocks, since they consistently see strong demand for their respective products and solutions. They are therefore the greatest opportunity for research during recessions. Dividends. Is a company's dividend payment going up or down? When are dividends paid? Is it being priced at a fair price? By dividing the company's current shares price by its profit per share, a price-to-earnings ratio or PE may be calculated to provide a clearer picture of this. However, given the slower development, it could be inexpensive. Finding the cheap shares that appear to be advantageous in each of the categories mentioned above as feasible may be worthwhile. Calculating the total assets shown on a company's balance sheet less depreciation plus liabilities can be utilized as well to determine the company's fair worth. Stocks with enough trading activity to let traders move into and out of contracts with ease are said to offer liquidity. Alibaba, Tata Steel, and ExxonMobil are few examples of liquid stocks. Stocks with the biggest potential for considerable price change are referred to as having a high degree of volatility. Selecting a volatile investment might be unsafe, but it additionally provides potential rewards. The use of mathematical analysis constitutes yet another kind of stock investigation. This entails evaluating a stock's past behavior as well as developing price predictions for the future via graphs as well as additional tools. That's vital to remember that technical examination is best utilized in combination with basic analysis due to the fact it can't ensure future success. The price-to-earning ratio of the company should be considered while purchasing it. When determining whether a stock is overvalued or undervalued, investors can utilize the PE ratio, which compares the price of a business share to its profit per share. A stock can seem cheap if the PE ratio is shorter, whereas a stock could be overpriced if the PE ratio is greater. It's also critical to monitor the state of the industry as a whole. A number of factors, including monetary policy and interest rates, can have an impact on the market for stocks. You may make smarter investing selections by staying educated about these aspects. In conclusion, learning how to navigate the market for stocks might seem stressful, but by comprehending the fundamentals regarding how the capital market functions, establishing a clear investment plan, examining stocks, and keeping an eye on market trends, you will be able to make well-informed choices that could increase your financial standing over time. As a beginner to the stock market, we highly recommend you to frequently select firms that you are familiar with. Instagram, Facebook, Amazon, and Nike are some of the most popular companies that will allow you to have trust as you do not have any experience in the stock market activities properly. Also, it is more advisable to go to the shares with low risk and take steps to start investing with a cost that you are able to afford. We hope that our audience received a very good understanding of how to navigate the stock market and how a beginner is able to start investing in the stock market with great strength and courage. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.